All right, good morning or good afternoon, I guess, for most of us. Welcome back here to Trader Minute. Great to have you aboard. Let's go out and take a look at where some of the signals are and what we can play. It's been a little bit of a market devoid of signal, and we talked about that possibility earlier this week, especially with the market kind of getting a little overbought, needing a little bit of chill out, consolidation time, and that's what we're seeing the market really kind of go through right now is that chill out consolidation type of period. Today's a little uglier out there than what the indexes suggest. If you look at the S&P, but then you look at the IWM, it's trading in the green, and so I don't really make too much of it, other than everything we've talked about so far, here with things. Now there is a signal on the board here this afternoon. Verizon, bullish signal. I talked about it this morning, that it could potentially be a signal here today, and it is, and so going to go out and trade that. So let's come in here to the signal or to the spreadsheet here. Verizon bullish, and again, please don't read anything about the market because there's a bullish or a bearish signal or something like that. Verizon and the market correlation, they don't have much to do with each other, and you've heard me say this with all the trades, so I'll continue to repeat the same thing. I would not read anything into the market based on the trades that are made for the challenge. Unless you got 3 call trades on board, then it probably suggests something, or 3 put trades on board probably suggests something here as well. So let's go out and trade Verizon here, 6:12 p.m. And been looking at the options here with it, and trying to kind of figure out how I want to play it. Just simply because of the fact the regular July options, you can see the price, jumps just slightly, but not a whole lot. There just aren't very many strikes. So you go with the 55, which, the delta's not very good, or you go with the 57.5 with a little better, where the delta's almost too good, meaning if the trade goes against us, the loss is significantly greater. So I'm going to come in here to the 12th of July and going to come in with the 56 calls here on the 12th of July options. Now, these aren't, super actively traded, but going to do about 12 contracts here of them. And I'm just going to give it a second here. We might be able to get a penny or two better price. So let's, you know what? Forget that. I'm just going to come in and make the trade. That way the alerts get out and go. And I'm just going to do a market order here for it. So 12 contracts on the 12th of July. 56 calls. And my computer is just a little slow here, so... there we go. It said, I heard the fill buzz. There we go. $1.98 is the fill price here for these. So let me make sure the alert goes out. But 12 contracts here on the 12th of July. 12th of July, 56 calls for $1.98 on Verizon. So there we go. About 2,400 here into it. All right. So boom, there we are, and we are in. Okay. And yes, it's just this touch lighter than, probably should be putting about 2,800 to 3,000 into the trade. And you'll notice I've been a little bit under the exposures on pretty much every trade this challenge. Right. I have been just a little bit under, and any reason for that? Maybe just summertime environment, and just wanted to be a little bit cautious. But anyway, 12th of July, 56 calls, and then it also gives us the chance for 3 trades instead of 2. Wouldn't have been able to do that if wouldn't have been able to have Under Armour, Disney, and Visa at the same time had that not been the case. So $1.98 entry price on 12 contracts. Stock price right here is 57.25. 57.25. And the ATR here on Verizon, let's see. The ATR is right here at $1.11. So $1.11 here for it. That's a pretty big ATR for Verizon, I guess. Let's see here. So 56.14 is our stop level, and our profit level is going to be 59.47. So let me just fill in the rest here. I'm sorry, my computer is just lagging here just a bit from when I type something in, and then there we go. All right, so the auto exit date is going to be 3 days from now if the option's red but hasn't hit its stop price, which is going to be the 15th, which 15th is Saturday, so it'll be the 17th. So 6:17 p.m. and then 6:19 p.m. for the auto exit date on green there, and then $1.98. So yeah. There we go. So the most cash we've put in a position here to date, and trade is open. We are back in the game. So that's Verizon and the Verizon trade there. Okay. All right, pretty simple, pretty straightforward, to run with here. I thought Bristol Myers would signal today. Just looking at it, I mean, it's a beautiful chart. I thought for sure it would signal, but it hasn't. It hasn't signaled here. It has everything visually. 3-7 crossover, push it above the Stoke on the 50. And so, it was one where I looked, I go, well, do I buy Bristol Myers? I priced out the options, looked at it all, because I was expecting it to be a signal. But the consolidation risk element still very high on it, which, I guess, all right, fine. But talk about a just nice little breakout here of pretty kind of picturesque consolidation pattern here for Bristol Myers, and something that I expect to go higher. Wouldn't be surprised to see trade in the 49 to 50 level here as we go forward. It could still possibly trigger, though it might be a little difficult with how the 3.7 is here overall. Okay, but anyway, we have some downside 3.7 crossover action out there, things like a Micron, but not triggering here today. Consolidation risk too high. Halliburton, same thing, not triggering consolidation risk here too high here for it. And by consolidation risk too high, all I mean is the chance of it going more than 2 average true ranges is statistically small. So I'm not saying it doesn't go down. In fact, I expect both of them to go further lower. But to get 2 average true ranges, basically the algorithm saying, hey, the probability of that is relatively small here with that. Okay. All right. So anyway, that's Verizon, the Verizon trade, and where the challenge signals here are today. Market vibe is unchanged here on the day. There's no nothing in the market internals that's very different. Here today, yeah, small caps are leading a little bit, but it's not changing the dynamic of them. So the bulls still have control. Market vibe is still a 5 here, which is what it was yesterday. It does risk going into neutral territory if the market vibe were to pull back to a 4 tomorrow. But that's what we would have to see for the market vibe to turn neutral from this point. As I kind of looked around this afternoon, kind of looked at things and where things were and how things were playing and set up. And I was looking for, what do I talk about here this afternoon that can add some insight, that can add some value to, from a trading standpoint or from a market understanding standpoint, that I haven't said before. And yeah, there just wasn't much. It's just one where there's just not a lot out there today. We could talk about the same old stories and the same old drama, and but in terms of it mattering with the price action, I don't think it does very much. I know there's some hubbub being made that maybe President Trump doesn't meet with, the Chinese premier at the G20 at the end of the month and all of that, but none of that's new. None of that is, all that is speculation, right? In terms of will it or won't it happen? What will happen if they don't, or what will happen if they do? Tomorrow we'll get the industrial production number here out of the Eurozone. I think that could be interesting, but pretty much only if it's a big beat. I think that's the only way it moves the market. I don't think a miss moves the market. I don't think coming in line moves the market. A big beat may affect the market. And even then, I don't know if it's going to push the market higher or lower. Right, a big beat is going to change the euro-dollar ratio, and that could actually lead to some selling, and you could actually argue positive data is going to be a negative in that case. So we'll have Chinese data here, Thursday night to Friday morning, that time period, and then a little bit of U.S. data on Friday. But there really just isn't a whole lot. We don't have earnings season out there. If we come into Estimize, we have a few companies here and there that are reporting, but there's nothing, from a reporting standpoint. So, it comes down to your charts, look at what risk reward exposure based on what you see in the charts and run with it, and that's how I'm running here with the challenge. We do have Lululemon here this afternoon. I think that's a very interesting report. This is a stock that has had some big ups and big downs here in the past. They looked after last earnings report like, man, they are running on all cylinders here. Expectations are pretty high here for it, but I would not be surprised to wake up tomorrow morning and see Lulu trading in the $200 area. Is it's really kind of distinguished itself from other retailers. That said, they say anything negative, it'll be a $140 stock in the morning. I think there's going to be a pretty darn big move there with that here on its earnings, but it's not going to be market moving. It's not going to be something that drives the overall market. We have Broadcom tomorrow, but again, not going to be a big driver. And then not a single earnings here on Friday. We go into next week. It is just as light as can be. But we'll start hearing from from companies like Adobe. We'll start to get into FedEx here soon. Oracle next week. So just a few, and kind of our normal pre-earning season earners, but it's just not very market moving there. So I do think the market is still going to be, subject to the whims, subject to the analyst and what they say in the mornings, and subject to some of the tweets and all of that, albeit to a lesser degree if there's nothing revolutionary about them. Here. BYND, Beyond Meat. I've talked about this a little bit. I put 2 day trades on here today with it. I day traded it twice. Took a really small gain once. It took a decent gain the other time. But this is a company that was downgraded yesterday, and so it was dinged. Was downgraded again this morning. And part of why I day traded it here today was because they got a downgrade and were gapping up. And when you see that tells you a lot. That just tells you a lot about the trajectory. The options are absolutely ridiculous. The implied volatility here on the options is insane. Let me pull it up. BYND here. Beyond Meat. But you can see implied volatility 178 for this week's options. I mean, it just, and then you come out and get some time, and it's 122. To put that by comparison, the implied volatility on the Verizon options that we bought is 20. Right? That's the implied volatility on Verizon. The implied volatility on BYND this week is 172. 8. It just means what? It means huge moves are priced in. The market makers are not going to give you cheap options to trade. The spreads are going to be high. If you're going to trade the options, you better be right. You better be right now, and you better be right in a huge way. Some people say, well, sell options in this environment. And you can say, yeah, they have a good reason. They have a good point. Premiums are pretty high. Yeah. Do you want to be selling an option and really kind of getting stuck hard? I mean, you come in, if you're willing to be a buyer of Beyond Meat at $120, later on this year, then you can get paid $40. $40 to sell those puts means it puts your buy price, your actual buy price for the stock at $80, right? As long as it stays above 80, which is right here, you're golden, right? I mean, that's a $40 in your pocket. You don't have to bet on it going up $40. You just have to make sure it doesn't go down to 80, which is, 50% from where it is here today? I mean, that's what the options are paying. You can't find this type of element in anything else out there right now. But with Beyond Meat, you can. And, if you have a little bit of a risk appetite and, don't mind holding some shares at 80, it's one that, you can get paid pretty well to sell those puts. Obviously it's for, 200 days from now, so you're definitely some time. But, you don't want to hold them that long. I mean, $20 here for August. I mean, you can sell the 120s for $20 for August, put your buy price here at 100, and, you have to realize it could be 100 in 2 days, right? There's a reason the implied volatility is as insane as it is. But if you're bullish on it and, you have a little risk appetite, there's an interesting opportunity there in selling some of the puts. I have not done it, and I won't do it. I don't have that risk appetite here for it. I'm not that bullish here on it, and it's still an IPO name. But am I willing to day trade it a little bit? I sure am. Am I willing to kind of take that risk, even though it pays very well? Not my risk appetite here just yet, but did want to show that here to you today. Okay. All right, so into Verizon, we'll plenty of cash to go out and make another trade or two, and we'll do that as the next signals come in. Thanks for being with us. Have yourselves a great evening, and we'll talk to you later. Take care.